Good morning, everybody. Welcome to the Flow Show, Tuesday, 18th of June. A very, very big day today because the new season's football fixtures are out. That's why it's important. Morning, Kay. How you doing, mate? Thanks for covering while I was off. Was it nice?
Good morning, mate. Welcome back. Yeah, it was good. Couple of good sessions. Stuff moving around a little bit, so we had some stuff to talk about. So yeah, you had a good time off?
Yeah, still recovering, mate. 3 days on the lash. I've not done one of those for a long while. Yeah, hard work at this age. But yeah, I managed to survive it. Got back home in one piece yesterday. Might take a while longer for my liver to catch up, though.
Oh, okay.
But,
A couple of more stuff to recover.
Yeah, exactly. Anyway, right, let's get cracking. Get stuck into what's been going on, starting with the BOJ and UEDA out once again, saying that underlying inflation is to gradually accelerate. Data out since April were roughly in line with our economic and price projections. Another bit of a repeat from last week and earlier messages saying, depending on economic, price and financial data and information available at the time, there was a chance we could raise interest rates at the July meeting. He said as much, was it Friday as well, Kay? And but no reaction in the end to the secondary comments on this one.
No.
We're actually trading into 158. Is he putting a hike on the table, and is the market going, so what?
Well, he's at least not closing the door, that's for sure. And we've seen that companies are starting to put hike their prices as well. So he's not closing the door, but the thing is, it's always the same issue, right? I mean, now the result of the Bank of Japan, for those who missed, were also that they've put a task force in place to have meetings with the market participant, and I trust mainly the Japanese ones, and perhaps a bit of BlackRock in there, I suppose, to see by how much they could cut their QE or their bond buying. But the market is yeah, as Mark said in the room, it's enough to talk about everything. That we want to see actions, and those actions, as he said, they may be put into place right on the July meeting. The problem is that that meeting is still more than a month away, and in the meantime, as the yen is going to be supported if JGB yields rise. Of course, we know that it also needs the rest of the world to weaken to close that or to narrow the interest rate gap. But the JGB market is extremely quiet, and so after that first big round that we saw gradually unfolding over the end of last year, and even like in the past month or month and a half or so prior to this, it has all quiet down on the JGB front, and I think there the market is really waiting for the Bank of Japan to really show up and tell them what they will do, because we've also already heard from Japanese insurers and GPIF, for instance, that they won't wait too long for too high rates to already get back into the JGB markets, which they didn't leave, of course, but they scaled down on their percentage of investments. And we're really now waiting for something concrete. And when he spoke, I looked at the timing overnight. I mean, dollar yen just went 20 pips lower, and that was it.
Yeah, I mean, coming back and seeing him actually talking about July as a date rather than, if the data's okay, we will hike again with no date. Is he being specific that they're looking for a hike?
I think if he sees, enough price rises, that will actually, I think, put the hike really on the table. The thing is, though, Ryan, as well, is over the weekend we had already Ueda and Kishida out. I spoke about it yesterday, saying that they still not convinced about wages catching up on prices. So I guess, yeah, they need to see more of that. The issue is that Ueda said that the hike may be on the table. First of all, we don't know how it's been translated, because it could
Yeah,
have been that he just said like, well, yeah, I mean, everything is possible, but
yeah,
and in English it's been translated as looking as if the hike is really on the table. I don't know, but personally, I think it is very possible. The problem is
yeah,
the timing. I mean,
exactly.
what do you do from now until then? Do you buy yen now and pay away a big figure also to get it in to keep it into the Bank of Japan meeting?
Yeah, I did wonder if translation might have been something behind it, and the press, the Western press, shall we say, being a bit liberal with their translations, shall we say. But again, I guess the other question we've got to ask is, what will the hike be? Would it be 10 pips or would it be 25 pips?
That's the thing.
If one was to come, I think 10 pips, the market's going to obviously they're not going to
Yeah.
do much on that one, but
And
25 pips could cause a bit of a wobble in the end.
I think but the thing is as well is that and you compare it with, like, for instance, 10-year US bonds and 1 year or 6 months US bonds that is more made for like day-to-day business also. And he's emphasizing all the time that if they hike rates, it's going to be on the short end, and the long end is going to be well, he says it's not a monetary policy tool, but it is a monetary policy tool, the JGB buying. There's no other way to look at it, in my opinion, whatever he may say. But that is going to tell us what's going to happen rather on the long end. And
Yeah,
I think there the market is really still having more questions than answers. Because imagine that over those meetings that they will have with the market participants, GPIF, the big Japanese insurers or asset managers, the trust banks as well are in there. Imagine that they say that, well, we are going to only fill the gap for, I don't know, 1 trillion out of the 2 trillion rumored now in the market. They may actually scale back on it and say like, okay, we are only going to reduce it by 1 trillion, and then the market will be disappointed.
yeah,
So
yeah,
we still have pieces of the puzzle to wait for before we can really make a decision. And then if you look at it elsewhere, the interest rates in the dollar have seemingly bottomed out a little bit below 420 in the tens, around 465 or so was it in the twos, and they're just holding the supports, not going down too much. We had speakers in the Federal Reserve. Those dots are probably annoying people as well, and that all plays against the yen. However you look at it, it's still a thing. If as I said so many times, I mean, it's going to need the rest of the world to really slow down before you can really buy in for longer. And yeah, to come back on potential cuts, the accepted levels that the Japanese are looking at is rates at around 0.5%. So if you're 0 to 10, that is either 25 BPs hikes, or if you take 0 to 10 and you officialize a 10, that's perhaps that's perhaps 4 times 10 BPs hike, and that is not going to change much if you do 10 BPs, even per meeting.
yeah. No, I agree with that, mate. I agree with that. But yeah, we shall have to see. Got a long way to go and lots of data to cross under the bridge, including Friday's CPI data from Japan. So that's going to be something we need to keep an eye on as well. We've had the national numbers previous to that, which showed a rise in CPI. Core CPI expected to go up to 2.6% from 2.2%, which will certainly keep the BOJ on the path. Another central bank who really doesn't know what they're doing or where things are going is the RBA. They held their rate unchanged at 4.35% as expected. Excuse me. Comments out from them saying inflation remains above target and is proving persistent. Bullock was out with a waffle, saying that the board discussed whether to hike rates at the meeting, but decided to stay the course on policy. That phrase, that those lines have been in the statements, minutes, whatever, probably for, I think, since they last changed rates. They still keep the hike language in there. She said, we're really at a complex part of the cycle at the moment, which is technical talk for they don't have a clue what's going on. So the board did not consider the case for a rate cut at this meeting, but would not say that the case for a rate hike is increasing. Aussie dollar has gone for a little ride this morning. Let's have a quick look at it versus, what should we look at it? Against the Kiwi. Particularly now been put out my short. That's back above our old magnet level. The market seems to have taken a bit of a hawkish tilt from this one, Kay, but it's no change really. They discussed hikes, thought staying unchanged was the best policy. As I say, they've kept that. They've had that in their language for several meetings now.
Yeah, that's what I said on my preview. I think it may be the clincher. It may be whether they still keep hike discussions or drop that and kept it. So I guess the market says not time yet to sell the Aussie and bought the Aussie on the back of it, but can hardly say that it's rushing away either, right? Yeah, Aussie Kiwi is a bit higher because we've seen a couple of more sluggish data out of New Zealand as well, and perhaps market leaning a bit against that 108 or so. Is there much more to say on the Aussie as such? I'm really not sure, to be honest.
No.
I don't know what to think about the Aussie.
Do you think it's a case that the fact that they're keeping this language of hikes in there makes it it's a growing risk that they will have to hike again?
Well, Bullock seems to be among the really hawks in the global central bank field right now, and yeah, we have to just take that into account. Now, is it enough to really start buying Aussie on the back of it? I'm not so sure, because on the first set of negative or weaker data, we could see the whole thing flip around again. It's probably keeping Aussie bit through some crosses like your Aussie Kiwi. They're cousins of each other, so that's probably going to be remaining bit. I think the one that you're showing right now, Euro Aussie, is probably going to find resistance on rallies for as long as the European political scene has not cleared up. But is it an outright green light to be long Aussie for a really fundamental play? I'm not sure. I don't know what to do with it. That's clear. I really don't know what to do with the Aussie right here. I don't have a strong bias on the Aussie at all.
No, I agree with that. I don't think there's any reason to go steaming into Aussie longs. It's just seems this time the market's reacted to it, and like you say, a bit of weakness in Kiwi as well. So it stopped going down. That's always a bad sign, particularly when you're short like me on this break, and we go back to trading a level again. We're back above 108, and let's see if it becomes support this time, and if we can make hay. But this magnet level still in play, been in play a long time. As you can see, going back years, we've been banging around this level at one stage or another, always willing to come back. Right, let's look a few other. Yep, go ahead.
The question is always with the currency, it has stopped to go down. You can't. I mean, there's no reason to be short of it. That is for sure. But is that enough of a reason to be long? I think for a part of the market it is, because again, coming back to what we were speaking about before, Mrs. Watanabe's son and nephew, they probably went into it and looked at it, and perhaps they are buying Aussie yen again. I'll show the Aussie yen because I showed it twice, I think, on the shows as well. We are just in front of, yeah, there you are, a big 105 level. If that would go, then I think it could just put a natural support under the Aussie versus everything.
Yeah, could be off to the races if that one goes.
Yeah, it's a big one, big
Yeah,
105.
very much. Right, let's crack on with some other data as well. We had, what did we have? We had yesterday the Empire State numbers coming in from the US. Little bit of an improvement, down -6 versus -1250, expected a -15.6 previously. So this one has been a little bit volatile of late. Used to be quite a good bellwether for the new manufacturing month. As I say, it's been a little bit wishy-washy. New orders came in at -1 versus a prior up 16.5. So again, all over the shop. Prices paid was 24.5, a little dip from the 28.3 previously. Employment was worse, coming in at -8.7 versus -6.4 previously. 6-month expectations did improve though to 30.1 from 14.5. As I said, this marks the start of the new manufacturing data from the US, well, from everywhere. For this month, we get fully fed later on, and then Friday we get the PMIs, flash PMIs kicking on as well. Fed's Harker says one cut in 2024 is likely if the economy evolves as expected, but then says 2 or no cuts in 2024 remain possible amid a lot of uncertainty. So again, another one doesn't know what's going on. It says it's fine to keep rates where they are now and wait for the data. We're not even close to a material deterioration in the jobs market. So brushing off those slightly off numbers, or rather some of the numbers in the NFP. Need to be cautious, wants several more months of data. Slow and steady wins the race, according to Mr. Harker. In politics, with another poll out of France, and Macron's party again coming in third, trailing this new left-wing alliance at 28%, and the Le Pen party at 33%. Macron's mob scored 18% in that. I caught sight of that poll on Friday, Kay. It's not looking good for Mr. Macron and his hope trade that he took.
And I find it well. I mean, he's a politician. He's not going to give in so easily. But I mean, his comments about even if I lose, I stay on. I don't know if he will have the choice. Yeah, the spreads between France and Germany have come back a little bit, supporting the euro since Friday afternoon and then yesterday. It's just coming back, but I don't think we're at the end of the shenanigans. The thing is, though, that it seems that Le Pen has watered down her stance, anti-European stance a little bit, and refrains from throwing her program in the wide open there, at least not the big spenders side of it. So I don't know if it's a smokescreen of what's to come, because I thought that she would really be the hardliner that she and her dad always were. Yeah, I don't know. Is she perhaps she's trying to smoothen the angles a little bit to try and get more voters on board, because now she doesn't only have to fight Macron, but she has to fight that that left-wing coalition, right? Which, by the way, if they would get into the hot seats, that would be a bit of a mess, because in between those parties, there's absolutely no alignment on anything.
Yeah, it sounds a bit. Everyone's having a go at the moment. And I think you're right. That was something I was thinking about when I saw that poll and the stuff from Le Pen. Is she maybe just watering things down while she's in a strong position? Then she doesn't lose the votes that don't like the far right stuff or policies. She can sound a bit more, slightly more centrist, and pick up those votes. Get in power. Once you're in power, then you can, effectively do what you like within reason. And or perhaps she does go the way of Maloney and does water things down altogether. But
yeah, well, that's not my base case, but it's politics, and when politics and money are involved, anything is possible, I guess.
Yeah, exactly. I think that's why maybe the euro's not continuing to crater, but it's still a big risk. I think that one of the big risks is not just what happens in France, but the knock-on effect to other countries. We've seen what happened Germany with those MEPs. We know what's happening in the Netherlands. So there's a big shift going on. I don't think this is going to be the end of the story. So
no. But as I was, we're talking about stuff on F.A.C.E yesterday as well, and talking about, for example, this local bank index. But as I said to the guys, to Blake and Dale, I said, like, well, the market is jumping from one horse onto the other, and what you don't trade now is probably, I mean, if you don't trade the European political side right now, or I mean over the day, not even over the weeks or months or so, it can fly under the radar for a while. Get some support for the euro, and then all of a sudden it kicks in again, and the euro gets another slap.
Yeah. Was there been any moves on these poll numbers when they've dropped? Or was there one on the first one? And
on Friday, you mean?
Yeah.
Oh, on Friday, but that was actually before the campaign. The open campaign actually started only this weekend. Euro printed the low on Friday.
Yeah, I thought that might be the case. Yeah,
that printed the low on Friday, and the spread printed the high on the French-German spread printed the high. So that's what these euro trades right now.
Yeah, exactly. But the more polls that come out that way, the market will probably pay less and less attention to. It will take more now to kick it. It's always a case the market gets that first shock, and then it just if it sees the same numbers, it just loses interest. But as Kay says yesterday, market will ignore it one day and then pick it up the next day. Thanks, Gavin. That's the one I saw as well this morning. Right. Over in Germany, it's likely to kick off again with wages because IG Metall is going to be looking at seeking a 7% wage increase for its workers. And as I say, this is likely to come up as a bum fight between those guys over there and firms. IG Metall, one of the big union associations over there in Germany. And when these guys want a pay rise, everyone has to listen because it can lead to industrial action if that's not seen through. But 7% wage increase, we can probably almost guarantee that's going to create a fight because with inflation coming down as it is, 7% is well above that. Probably the excuse that they want to catch up from prior years' inflation. But that's one to keep an eye on over the weeks ahead to see how that goes and what the Germans do about that. And that's it. All I've got coming back today on the news front. I don't know, Kay, there's any bits and bobs you've got?
No, we can move on, Ryan. A bit of geopolitics again. East from here, but I mean, there's just no solutions right now. So I think we can move on, and nothing much changed over there.
Yeah, we'll have a look what's coming up today because we've got US retail sales, which is really the first big data we've had since the FOMC. So it's going to be the first data that puts the Fed message to the test. We know that they're still pushing for cuts, higher for longer still in play via those dots. This data is probably going to get the market moving, depending which way it goes. The market still looking for when the Fed is going to tout cuts, as we just heard from Harker. They haven't got a clue. Some of them haven't got a clue when that's going to be. So these retail sales have potential to be a pretty decent market mover as well. We've got industrial production after that as well. So keep an eye on that data. Are we starting to see, the market going back into hit the dollar on any bad news mood, or the dollar seems to be holding up fairly well.
Yeah, well, you know what, Ryan? I think it's now that we've already had a whole slew of central bankers and more or less saying the same, basically, as you say, data dependence is the translation for I don't know. I think the retail sales are going to be important enough today, just as the first real number on for this week that has a tendency to move markets. So I think it's going to be important enough, that one coming out, because the Empire Manufacturing Index, we know that the manufacturing sector is struggling a little bit, right? So I wouldn't. Those were not really surprising numbers. I'd say yesterday, even though the overall improved just a little bit. I mean, if you break it down, there's still the labor side of things is not good in the manufacturing sector. But I think, yeah, today it could be an interesting one, and could be an interesting one on both sides. If it comes out a bit better than expected, we see those yields having crept up a little bit in the US again. The US, the twos could get back into the 480s easily. The 10s perhaps retesting the 435, 440 could be an interesting day. And if they're weaker, we know how a market likes to sell dollars, so they'll probably give it a go on a weak one.
Yep, and we've got a couple of Fed speakers out today as well to keep an eye on, Barkin and Collins coming up later, among some others. So, yeah, we're all back to data watching and reacting to the data, and getting in that mood where you can't sit in a trade for longer than 5 minutes or until the next bit of data. So just to run over a couple of bits and bobs. As I say, I was short Aussie Kiwi. That got put out overnight on this break above there. So back into a bit more neutral stance with that one. I'm still long a bit of Kiwi. Managed to, I was long quite high up after the NFP 6170s, but I managed to knock those out when we had the rally out there last week. I'm still long from down low 61s at the moment, just holding the line, give or take. The main number for me in Kiwis more so down at this 80, 85, maybe 90 level down here. If we bust below that and get through the bottom of the zone, we could be heading much lower. But bounce is looking pretty weak at the moment after that move up there. I thought we were getting back there, we'd be sitting up there, but no, dollar took over a bit and we've come back down again. So this one's on a little bit of a knife edge on the Kiwi. Not much else going on elsewhere. Dollar yen back into the 158s. Again, you can't keep this down for long. All these dips, whenever we've got these sharp dips, they've been brought up pretty quickly, and we're back into grind mode, it seems, again. So all eyes are going to be back on this 160 area. This is a real big long-term level. It was I had it on my old weekly charts and stuff, so it really is at a, I don't know if I still got them on here. Let's have a look. There we go. There are some fibs up there, but it's a big historical level going back to the 1990s up there. So that's still the big number to watch for this one. If we get up there, may cause the jaw boning to pick up from the powers that be. So it's a big old level up, but as I say, that 160 area. For the rest, it's just seems like business as usual. Not much has changed since I was away on Friday. We've had a little look to the downside. Cable getting back under 127, looking to be holding it for now, but not really pushing the envelope for the downside. Again, a bit of a zone in play, making it a little bit messy. We don't seem to want to really hold below there. So it's not out the realms of possibility that we make a move back above 127, but if we keep holding below 127, then maybe we're going to get a bit of a push lower towards the downside, and maybe go and have a look at 126. But for once, cable pretty steady, not doing too much to move. Obviously, Bank of England this week, CPI coming as well tomorrow is all going to be important, so we could be seeing just a bit of sideways action for that. that CPI is going to be important, very important tomorrow. I've been talking about this one. I think if we get a print below 2% on the headline, it's going to really ramp up expectations for a cut on Thursday. Has been any much change in chatter expectations for this one, Kay?
Yeah, I think the sentiment, as I was saying also yesterday when previewing the week a little bit, sterling is important this week. I think we've seen this relative outperformance of the sterling for a long while, and this week I think the market is very cautious because it could mean that kind of sentiment, and as we've already been saying, the market likes to be a bit emotional when trading sterling. We could see a shift in sentiment. It is very possible, and I've I tried to catch a knife end of last week, and then I let it go yesterday because my own bias is like being really tested, and I've put my feelings for the sterling in the fridge for now, and I will open the fridge tomorrow and on Thursday, because tomorrow could really be the start of something new, and it could be strong for the sterling, and then we are going likely to test 84 in euro sterling, for instance. But if we start to confirm slowdowns, then I fear a bit for the sterling. Yeah, we could be very quickly trading back at 125 or 124.5 on the cable if the dollar remains beat, and the sterling turns around.
Yeah. I have to admit, I'm getting a little bit twitchy to maybe get a bit of a euro sterling long on. If it's twofold. If this CPI is weaker than expected, we're expecting 2% on the headline, I think 3.5%, which is lower on the core. If we do see softer numbers, that is going to ramp up expectations for Thursday. I think, as I say, it is a strong possibility if that CPI headline gets below 2%. That'll be the first major currency or major country to have CPI below a 2% handle. Not even the Bank of Canada are below. They're only there on their BOC core measure.
Yeah,
no other
only the Swiss
countries below their target, shall we say? Well, except for the S&P, of course, but they weren't much above. They weren't much above it in the first place.
That's true.
So I think, the risks for seeing sterling getting sold off this week, I think, outweigh the risks of seeing it go higher. Because if that CPI does come in lower, that's going to increase the chances of a cut, obviously. Then you're going to see this rally. If it doesn't, even if it comes in just above expectations, it will still be inflation heading towards target close to 2%, which should get the Bank of England, at the very least, indicating a cut is to come very shortly, possibly August. So I think that's why sterling gains, and even them staying unchanged, will be limited. And if we're trading around 84.50 here, and sterling strengthens on, them not cutting, then I think that 84 level is well within a stretch point to maybe hold again, because it still won't change the fact that the BOE desperately want to cut, and cuts will be coming. So I think on that basis of staying high for longer, the impact for a positive pound is limited. So that's why I'm getting a little bit itchy to maybe pick up a couple of longs in this one. Just not massive. I'll just play against the 84 level for that.
It remains to be seen if euro sterling is your best instrument if there's a mess going on in Europe, because that's, we always have to look at the other side of a pair, right? But I agree. I mean, it's we did see the break, the acceleration on the break. We did see the test of 84, the figure that was somewhere where it could have a possible first target. That's what it did. I know some people caught a knife down there, which is working quite nicely right now. The problem is the other side of the coin, right? But it's unless you really want to dive into sterling yen, for instance, it's a bit tough to find another currency to be short sterling against, unless you want to give a go in stuff like sterling Aussie or something, but I'm
Yeah,
trying to think of a currency that I would be comfortable being long versus
it's all like
sterling.
jumping in
And
a lake of sharks at the moment, isn't it? Whichever
it's
one you pick.
yeah, but look at what it's doing. Yeah, you have those nasty corrections, nasty moves lower, and then you're back trading above 200. And yeah,
Yeah.
I wouldn't be short sterling yen, that's for sure.
No,
Uh,
no, definitely,
Not right
definitely.
now, but um, no, perhaps yeah.
Maybe by
Look
the
more
dip.
at one of the
Another one.
commodity currencies also. Yeah.
Yeah, yeah, maybe sterling Aussie, something like that. But yeah, we shall
Mm.
see what that brings tomorrow. Not a lot else that I'm looking at the moment. I've got a largely empty book, just a few little bits and pieces on, nothing huge. Just going to be a case of reacting, I think, to things at the moment, seeing if we get any trade into range edges and whatnot. Kay, do you want to take it over for a little bit?
It's literally going to be a couple of minutes because I don't have much to add. We see this market. We see the continuation of let's say the yen trade for now. I just want to have a quick look at what's happening on the S&P because we for our listeners we spoke about this at least partial blackout period for share buybacks, and we didn't know what to do with it with this S&P. Perhaps there would be a bit of a start of the week move back down because we're losing the bid. Well, nothing of the likes is happening at all. This thing is just pushing through, and animal spirits, what doesn't go down goes up. There's still money flowing in there despite all those money market funds getting more and more money. There still seems to be enough money to drive this higher. So your next level here, bit of an extension level around 5,500. If that would go, I don't have much before the before the 56s. This thing is really still looking very big, and as I've already been saying, for as long as we don't start to get back below 53, 70, 80, this it's very hard to fight this. This looks a little bit like yen crosses right now. You see a bit of a setback, and then the stuff just comes back and puts in a fresh it's in a fresh high. Um,
Was any fallout? Has there been any talk about from the buyback ban, should we
Nothing.
say, at the end of the buyback period?
All quiet.
Yeah.
Zero, mate. Absolute zero. There's nothing has been really said or done in the markets. It all went really quiet. This is a bit of a steep one. If you actually if you're long, for me this is too steep. Okay, but for those trading like the short end, keep an eye on what's happening around 54 and a quarter. That may be your first level to watch. If you got back down here, then it may be we have a revisit down there. But for as long as we don't, there's very little reason to go and just sell it because we print another pseudo or real technical level. That's the issue with when you look at text is that you have your level there, and some people create the the importance of the level. Let's say let's put it that way. But it's just a number. It's just a number on a picture, right? It's just an extension number. It doesn't mean that it has to stop there. And last week, if we would have heard something about those buyback blackouts, I would have looked at countering this, but I took out my offer. I'm not even bothering to go against this one right now, whether it's a level or not. Yes, we see we're still this is not looking great. The Swiss franc, we had a bit of a rebound here, and I was saying like, oh, okay, this may be the start of of a bottoming formation, but Swiss franc is still quite strong. So I was actually looking at this to handle my Kiwi Swiss position as well, and because I was a bit long Kiwi Swiss and hoping for this zone here to hold. But when I look at everything that's going on in Swissy right now, I think it's a bit hot for my liking. Swiss, we will have to wait for the SMB. If Jordan tells us that he thinks that the Swiss has strengthened enough, then okay, then we can sell Swiss again. But look, dollar Swiss is getting under this 88.80 again. It's the market is still seemingly getting out of Swiss positions if I look at it from this angle. So it's a bit of a hot potato to handle the Swiss franc for now. So I don't have much, but I will be very, very closely watching what the SNB will do and say. But that is something for tomorrow's show. Last one. The positive vibes around the South African coalition are continuing for now, and we are getting towards the downside of the triangle. Okay, so tiny, tiny, tiny positions, but I'm trying to catch a knife here, and I will see whether we close above or below 18, and then make a decision. The positions are of that size that even if it gets down below here, there's not going to be a lot of danger percentage-wise to my book. And then I will see whether I need to close it or not. And then if ever we get like a stop run and then start to get back higher, then I may be pushing the positions a little bit. But for now, I'm keeping it very, very, very small. And really, that is about it, guys. Yeah,
Thanks,
the new
mate.
levels are probably somewhere around high 158s in the dollar yen. If we get through the this is the post Bank of Japan high. Took a few days, a few sessions to get back up there, and this is reflective of everything that's going on in the yen. You take whatever yen cross you want, it's doing exactly the same thing. Back over to you, Ryan.
Thank you very much, mates. Yeah, that'll do for today. And yeah, Gavin's saying every call year-end raise to 6,000 seems to get lots of media hype yesterday. Yeah, it's always looking good at the top, mate. That's when things always look more strong. So we shall see. It will go where it wants to go. Thank you all. Thanks again, K-Man, for covering the last couple of days, me being off. Have a great day trading, everybody, and we shall see you all for the aftermath of the UK CPI report tomorrow morning. Have a good one, folks.